Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 2nd of March. I'm Daniel Lam, your host for the podcast. I was very excited on Tuesday night because I finally stopped bleeding in my chess tournament. I won my game after losing my previous two. And this excitement continued yesterday, where the Hang Seng Index was up 4%, the biggest up move this year since the first trading day on the 3rd of January. So let us look deeper into this. So first of all, China's economy saw a strong rebound in February as it continues its post-COVID revival. Manufacturing PMI rose to 52.6 versus an estimated 50.6 and prior 50.1, and services PMI to 56.3. That's versus an estimate of 54.9. And the manufacturing print was the highest in more than 10 years. This data helps provide some credence to the cyclical recovery view. Secondly, China home sales rose strongly in the month of February as well, signaling demand is starting to recover after policymakers expanded support for the sector. Now, the value of new home sales by the 100 biggest real estate developers climbed 16% year-on-year. It was the first year-on-year increase since June 2021 and suggests that there is some pent-up demand in the system when confidence returns. Thirdly, President Xi signaled that he will unveil an overhaul of China's government agencies when the country's legislature holds the annual gathering next week. This will include rolling out deepening structural reforms in the finance sector and exercise more control over science and technology. Well, these comments raise expectations for expanded efforts to boost growth and consumption. So this confluence of factors over the last 48 hours lead to the sharp rebound in the Hang Seng Index on Wednesday. However, the size of the buying on Wednesday was not so high considering the confluence of news. It was just slightly over the volume versus Tuesday's, suggesting that this could be short covering in the majority of the volume. In order to break the current downtrend, the Hang Seng Index needs to go above the resistance at 20,793, which is less than 200 index points from Wednesday's close. However, if the index cannot break and stay above that level, then it is quite likely that the index may retest the 19,300 to 19,600 level that we've been discussing. And if that happens, that would be a reasonable zone for investors to start buying the index in stages. That is all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.